I want to bring in a guy who publishes what is called the Gloom, Boom and Doom report. His name is Marc Faber, and he's joining us by phone from Thailand, so we're going to cut this pretty short. Marc Faber, you got to tell me, when does doom arrive for Wall Street?
Well, that's a good question. I think that if you owned the wrong shares, you had to some extent already doomed, because a lot of shares are lower than at the peak in 2015. But in general, if you own the index, you've done well.
Are you calling for a major? Are you calling for a huge sell-off in the near future?
Well, not necessarily in the near future, but I think that if you look at the valuation of stocks, they're high. You look at the valuation of the US dollar, it is high. If you look at the money flows in the last few weeks, a lot of money has flown into US equities, both from domestic investors and international investors. As a contrarian, this is not a particularly good sign. However, there is a lot of liquidity in the world, and I believe that whatever you think, the liquidity will move into precious metals in the next 3 to 6 months, and precious metal stocks. So I would be long gold shares, silver shares, platinum, and the underlying physical. And I also think that the sentiment is much too optimistic about stocks, but far too pessimistic about bonds.
Okay.
And I would probably, as a trade, buy some treasury bonds in the U.S. because the yields have gone up substantially over the last, say, 3 months. And I believe that the yields will come off again, not necessarily to new lows, but they can go down to, say, on the 10 years, 1.75%, 1.5%, and so forth.
Mark,
so
here's what I'm getting from this
trade,
conversation, and I want to cut right at it. What I'm hearing, I'm sorry, I'm not trying to cut you off. I just want to get to it real fast. In the next 3 to 6 months, you see a serious rally in precious metals, gold, silver, platinum. Marc Faber, I've got to end it there. We appreciate you being with us. You are the gloom, doom, boom guy. Thanks for joining us. We appreciate it.